Excellent. Welcome, guys, tonight to another episode of Fast Track to Freedom. I'm going to jump straight into it tonight, and we've got some. This is going to be the last advanced training before the newbies that have joined. I'm going to cater more to them from next week on. I've got two in the group, and possibly another 2 or 3 coming as well, which will be a nice little number for us to then, move on with the next lot of students. The ones that are on tonight's call, you guys that have been doing this a bit longer, we're going to be doing the chart markup sessions on a Sunday night, if it's not bank holiday. And yeah, obviously we can all still do one-to-one, so don't think like this is the end of it. You guys know how to trade. It's mainly just practice now. Practice makes perfect. So I'm going to jump straight in. So I put a message in the group earlier to say that everyone, if you're serious about mastering this strategy, everyone needs to do the pro entry masterclass, the indicator masterclass. Oh my goodness, so good. I'm going to be going through a lot of the stuff that I saw in there tonight, but it's worth watching over and over and over. I've watched it, I don't know, a lot of times, and I still picked up new stuff, and I was like, oh my god, our strategy, I'm going to explain it tonight, our strategy is phenomenal. It is phenomenal. It's not fair how good it is. So what I want to do first of all is just explain one thing. If any of you have been used to seeing Manny for a long time, he'll talk about confluence. Now, confluence is where there's one spot in the market and 3 or 4 things, are happening at the same time or indicating the same bias, like a buy or a sell. So what he would normally say, this is back in the day, is if you've got one confirmation, very weak trade, don't take it, basically. Yeah, so if you had support and resistance, and that was it, nothing else was there, one confirmation isn't good enough. When you have 2, two confirmations, still not great. Don't take it. 3 confirmations, okay, we're getting there. Like if you're experienced, you can, if you know what you're doing, you can probably trade. So experienced only. When we get down to like 4 confirmations, this is becoming a bit more solid. Still, it could be good. I'm kind of making these up, but the essence is. And then 5 or more is a green light. So I remember back in the day, I was looking at all my confirmations and be like, right, I've got 1, 2, 3, 4, 5, 6. Sweet, right, we're good to trade. So we've got our indicators. We've got 7 indicators. We've also got the harmonic scanner. And what I'm going to do tonight is just show you how many confirmations we're getting before we take a trade. That is why when you do this strategy properly and you don't rush it and you're patient, it is ridiculous. It's ridiculous. So I just want you to keep that in mind, that top bit, always keep that in mind. Like how many confirmations are we getting before we trade? All right, keep that in mind. Right, so first of all, we're going to talk about Heikin Ashi candles. So, like in the chat, does anyone know, or just chuck it in the chat, some ideas, the main difference between the generic candles and the Heikin Ashi candles? What's the main differences? Do you know? Remember, the Heikin Ashi candle was the candle we trade on. So I want you to know this candle inside out. I want you to know exactly what makes it work. All right, because this is our strategy. We need to master these basics. So what is it? What's the difference, Heikin Ashi, between a normal candle and a Heikin Ashi? James, you're right. Yeah, shows the trend. Anyone else? Okay, send them in. We've only got one. Right, the candles, Westy, the average of price, absolutely. Yeah, so you get less changes in colors. You get less like confusion, which is exactly what candles are there for. So I just want you to all know that the candles, the normal candles, are used by the banks. So when the banks trade, they are trading with candles because they know that the majority of us, the amateur, trade with candles. So the banks, right, they have all these algorithms that manipulate the market. So they make patterns, they bring price back to certain levels because they know that we're taught to sell off double tops, buy off double bottoms, all that sort of very, very basic information. So the banks make it happen. Yeah, they'll show what they want you to see with their algorithms. And then that's why most people lose, because they jump in, the banks wipe them out. Yeah? Candles are what the banks use, and they are manipulated. Heikin Ashis, because we're not seeing the red, blue, red, blue, red, blue, all the different changes in candle color, we're seeing the average, we're seeing the trends. It's a trend identifying candle, but there are some absolute secrets. So if I'm saying this to you and this is the first time you've heard it, then you need to watch that Pro Entry Masterclass until you know it back to front. Okay, because this is the difference. This is the difference. You've got to master this stuff. All right. Okay. So let me just put, so trend and not. Okay. What I'm going to do now is just flip over to GU. I'm going to show you exactly. Actually, let me draw it here first. Let me see. All right. So let's say we've got a range of candles, and they're all blue. Yeah. So they're blue candles. We're in a full-on uptrend. Boom, boom, boom. I'll do the wicks in a minute, but you know what I mean. Yeah. Flying along. We're looking good. Everyone's happy. At this point, the scanner comes in. Right, so all you're seeing previously to the scanner is bullish momentum. Buy, 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 buy. Why on earth? Why you wouldn't sell there, would you? You'd have to wait for it to turn around, do your analysis, blah, 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 blah. But let's focus just on the Heikin Ashis. When a Heikin Ashi does this, gives you a doji. For a Heikin Ashi candle to give you a doji means that the market is in utter confusion. All right, the average of price is literally being pulled apart from top to bottom. No one knows where it's going. This works on any time frame, but especially on the hour, because we're marking our charts on the hour. So I look for them on that time frame, but I look for them on the 15 as well when I'm looking to enter. So you get a doji like this. Even better, well, I'm having a Manny moment. Right. Even better is if this changes color and becomes red. All right, so scanner calls a sell here. And on the hour, you get a red doji. Okay, you are absolutely looking for exactly that on the Heikin Ashi Candles. Just quickly, is this news to anyone? Is it the first time everyone's heard it? Just put a 1 if this is the first time you've heard it. Right, next, what we're looking for is this very next candle. Doesn't really matter the size of the body, but what is vital is that the wick longer than the last blue candle. Right, what that suggests, what that means is that it has broken the previous low. And not the swing low, but the momentum, the low of the buying pressure has been broken. Excuse the wicks. Obviously, this happens in reverse when we're looking to sell. It would be red, 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 and then we're looking for blue impulses. This one, though, you could have like a crazy wick, like to the upside. So you haven't got your confirmation candle yet. Okay, this might still be on the hour. You might have dropped down to the 15 by now if you're looking. You know, you've got everything else there. You're just looking for entry. Fine. Look for it on the 15 as well. And then what you want, the very next candle, ideally, is you want our confirmation candle. Flat top. There. And obviously, oh, let's be brave. Let's get the brush. And you want that crossing the 4, trying to turn. I have been practicing my drawing skills. I hope you all appreciate it. No, but seriously, that's the kind of candlestick pattern we want to see with Heikin Ashi. So you got bullish, 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 red doji. If it's a blue doji, it's still okay, but red doji, indecision. The market's busted, confused, doesn't know where it's going. All right. What you'll probably see on the candles there is consolidation. You know, you'll see the engulfing, like a bearish engulfing, and then like a bullish engulfing, and it will just be scrappy. You won't know where it's going, and that's kind of what that is going to signify. The next candle after that is that big wick. You need that wick to beat the low. Especially, it has to be lower than the low of the doji. Ideally, the low of the previous bullish push. And then if we get our confirmation candle bang after that, that is a strategy in itself. All right. So I want you to think, how many confirmations are we getting? Well, we've already got the scanner, which is about 12. We've then got the Heikin Ashis, and because we know how to use them, we've got our candles giving us confirmations. Okay, let's say the scanner gives us 5, and I'll go through them later. We've then got the candles telling us what to do. And we've got a confirmation candle, so that's 7, and we've got it crossing the McGinley. That's the confirmation. We've got 7 already. We've got 7 confirmations. Strong strategy. Strong. Okay. Heikin Ashi, this is what you want to see. If you get the doji and these two the other way around, that's still cool. And you might get doji, something like this, another doji. You might get a blue, and then you get another doji, and then you get the confirmation. You know, it's not, the market's not perfect. But this is, if you could get it perfect, this is what you want to see. Now, let me show you on GU. I scalped GU earlier. And I will show you why. Right, so the scanner called sell up here. It's better on our kind of. See, like I say, it's not always perfect. But you've got the blue, 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 Bosch, red doji. The next one didn't have a flat, didn't have a top, a wick at the top, but it broke previous blues, 3 of them with that wick. I'm zoomed up, so these wicks crazy. You then get the next one, still got indecision. You've got price being shifted in and around. You then get another doji. And then hallelujah, what do you get? What? That was the confirmation candle. On the 15-minute, here, bang, that's where I got in. That closed, pulled back, entered. 20 odd pips. All right, so you can use, basically the way I've taught you to use the scanner and this strategy is like the creme de la creme. It's the best way to use it, to be honest. But there are lots and lots and lots and lots of other opportunities. Here we go. Okay. All right, so these masterclasses, the training that Manny gives us is honestly, it blows my mind. Every time I watch him, the guy's incredible. Like, yeah, just anytime you get a spare minute, if you're not drawing on the charts, watch his masterclass videos. They're incredible. Incredible. So does everyone get that? Yeah, we've got, they offer trend direction. They offer less confusion because they're not being manipulated by normal candles. And then you've got the way to see where indecision and control then comes back into our direction. Okay, the other thing I want to show you guys is if we look at the price here, we've got two numbers here. My chart shows the price of the candle in purple, and that's where this line is, which is the offered price, the live price on the Heikin Ashi candle. What you'll see floating around either side of it is a red number. That is the actual market price based on the candles. See, they're slightly different. That's because the Heikin Ashi has the average and the candle has the actual price. Okay, so if you're ever thinking, well, I entered and I'm 4 pips lower, if there's any discrepancy in the entry price, you can see it there, or you can flip back to candle. And then the one becomes. All right, another little tip. Probably most. Right, I'm going to move on to DC channel, but before I do, any questions on Heikin Ashi? Come off mute, drop in the chat. Okay, I'm just going to give it another few seconds before I move on. Right, we're going to get on to DC channel. Perfect. Okay, so the DC channel, let me come to AD CAD. I was lining this up to trade earlier, and I just stopped paying it any attention. But scanner called a buy here. Called a buy here, missed it. Never mind. Cracker. But let's turn the channel on. Okay, so we all know that the settings are 50, which means this range in price, so the red to the blue, is the average of the last 50 candles, the high and low. That's why it fluctuates. This acts as a floating support and resistance. Just quickly, we've got 7 confirmations just by using Heikin Ashi confirmation and the scanner. 7. Right. The DC channel. So when the reason why that's the first thing we tick off on the on our confirmation, our checklist, trading checklist. If the DC channel hasn't been hit, then it's still got room to go and hit it. So if it was calling a buy here and the DC channel was down here, we're never going to take that trade because it's going to come down to complete the move. Yeah, because that's the average of the last 50 candles. Why 50? Well, 50 in all of trading is like the equilibrium. It's like the middle. It's like the balance point of the market. So that's why it was chosen. 50 McGinley also has the same kind of vibe to it too. But let's stick with the DC channel. So if you think these are like Bollinger Bands that are more rounded, the DC channel gives us more flat readings, which Manny prefers. I haven't used the Bollinger Bands, but I like them. So I want you to think, like, if we're looking at the scanner and we have, so we're looking at the scanner and we've got our DC channel. Yeah. And then we've got the red one up here. Yeah, this is our DC channel. And the scanner calls a buy here. Okay. Oh, so Neff, cheers for that message. I think it's because you changed your name. I wasn't sure. Okay. So the scanner calls a buy here. What we're looking at, aren't we, is we go, right, is this buy here, is this on a support and resistance level? Yeah. We look for the market to have come here before and given us this maybe. Then boom, it gives us a buy here. Yeah, we've had established 1, 2, third hit on the support, and we're on the DC channel. Yeah. So what that means is we've got a double support, or if you're selling, a double resistance. This is why it's so powerful. We've got a double support or a double resistance. The DC channel is that structure in the market based on the candles. So we've got 9 confirmations. 9. And I was probably being easy on the scanner, giving it 5. But 9. And we're only at DC channel. Yeah, that's all I want to talk about, the DC channel. Floating support and resistance based on the average of the last 50 candles. But when our scanner gives us a signal to trade, support and resistance and the DC channel are all in the same place. Whew. Literally flying. Yeah, so we get double structure. Okay, let me know if that doesn't make sense to anyone. If anyone needs to ask any questions, please jump on, send it in the chat or come off mute. I'm going to move on to the next thing. So we've done DC channel. We've now got 7. No, we've got 9 confirmations. Was it 9? I think it was 9. And we've got the DC channel and Heikin Ashi Candles. Right, the next thing I want to talk about is the McGinleys. So the 4 McGinley is based on us being able to read the confirmation candle. Yeah, it's the early stages of it flipping and changing direction. Yeah, I want to concentrate mainly on the 20. 20. Let me get rid of all my drawings. Turn this off. Turn the 4 off. Right, my 20 is black. My 50 is red. Okay, I'm going to go to the hour. Start with. Right, where's the... Oh, so good. Okay. Actually, I will turn the 4 on. So when the 4 Our second entry is when the 4 crosses the 20, the candle closes. We jump in again. Yeah, when the 4 will always come back to the 20. Yeah, I don't know why, but it just likes to come back and retest, 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 20. What usually happens on the 50, okay, on the 50, is it usually will bounce a few times. So any of you watching the pro entry stuff, any of you watching Manny live, the 20 and the 50 is what he calls the cloud. That is the cloud. It's not rocket science. He's just colored it in and made it look a little bit special. That is the cloud. So we get a break through the 20 and the 50 after the market's been rallying. Breaks, comes underneath. This is the market structure reversal here. Comes up and tests. It's sloppy because it comes outside the 50 and then breaks again. And then watch it from here. Breaks, 4 stays under the 20. Anytime the 4 stays under the 20, we're in a downtrend, obviously uptrend in reverse. Yeah, happy days. Happy days. Starts pulling back towards the 20 again. Cool. Pulls back into the cloud. Doesn't break the 50. Drops again, crosses. Tests it. Plays around with it. Tests it. You see how many times it comes back to the 20? All right, it doesn't usually come back to the 50. In the market structure reversal, it can. But when it's full trend trading like that, usually. We then have the first indication that the market's going to change. Cross of the 20. We got the cross of the 50. And importantly, 20 and 50 cross here. Market rejects that, comes back through, bounces off, we get another move. And this happens just over and over and over again. So do you know when, like, you know, we're not sure how long we should hold the trade for? Are you staying in? Are you getting out? When are you getting out? Like anytime it goes, it would do that. It crosses to 50 and I'm selling, I would pull it. Even though it went on and flew down, I would pull it because the indication is it's going to change. It's always on the retest whether that is going to hold true. So if the retest breaks, then you might get another opportunity here to sell. But if the retest holds, which I'll show you when it reverses, so you've got more bounces off the 50, more bounces off the 50, more bounces, breaks back through, bounces, breaks, bounces, and now it's just broken. Yeah. What we did have before that, when we get into structure, is we had the break of the trend line. There. So it got a little bit sloppy here, but then broke the trend and tested the outside. That's why I was kind of interested in it, because it came and looked. It broke the trend, hit the outside, and there was a scanner saying buy. I think it was a cipher. You can kind of see it in there, like the high, low, high, low. I think there was divergence potentially. Nope. Nope. Okay. Probably why I didn't do it. We'll pay it much attention. Okay, cool. So when the 20 and the 50 cross on the 15-minute, that is the first sign when we're in a trending market. Because remember, on the hour, these lines will cross less often. On the 15-minute, they'll cross more often. Okay, because there's more candles per hour. Now, if we're at the market structure reversal, yeah, which we don't want to trade, do we? Remember, we want to take the second or third hit. So at the market structure reversal, it got a bit confusing because it broke back through and then came back and under. Here, say we were looking at this particular zone here. Yeah, we've got like the one touch. This isn't perfect. I'm just trying to make it fit. Bring a Manny. So it breaks, comes under here, bang. The scanner gives a sell. We've got structure, DC channel. We've got all of that there. Divergence, you know, whatever you want. It's all lining up. Then we drop to the 15-minute here, and we've got, let's have a look. Okay, so stay here. You've then got, you're getting called a sell here. So you've got the 20 and the 50 underneath the 4 in the right order. Yeah, if we look closely, we get the blue, 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 doji, pushback, the pullback, the doji, 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 that indecision, drop, bang. Our confirmation candle will probably be that one. It then enters the second one there, third one there, bang, we're in 3 times. So that absolute move to get us in 3 times is to indicate early that the trend is continuing. Remember, we're continuing the trend. And we're looking at the pullback being finished for us to then take it down. So we want the pullback to come and then drop. Yeah, so we're trading the continuation, and we use the 15 minutes to enter because it's an early entry and it's an early indication that that pullback has finished. Yeah? Is everyone with me? Is everyone with me? We then watch it on the hour after we've entered because we're just waiting for it to drop to our TP, or if we've entered and the 4 and 50 have crossed in a bullish direction, we're out. That's when I would get out. All right, when it does this and then retests underneath, we might get another chance to sell. But the better you get with these indicators, honestly, the better you get with them, the more opportunities there are in the market and the less reliance on the scanner. The scanner is incredible. It's brilliant for anyone that wants a signal to start your trade. Yeah. So if we look at the 4 as the confirmation candle, which I counted earlier, but the 20 and 50 relationship where it crosses, bounces, crosses, bounces, giving us an indication whether we want to buy or sell. We're up to 11. We're up to 11 confirmations. Oh dear. 11 confirmations. And that we haven't even gone through the whole strategy. Tell you what, you need like a degree to draw on this, and maybe it's just me. Right, so we're now up to 11 confirmations. We haven't even talked about AO, haven't talked about Stoch, haven't talked about the DMI. So can we just take some time to appreciate that when this strategy lines up, it's the best. Honestly, it's the best. I've tried others. This strategy, when you know what you're doing and you're patient enough to wait for it all to come together, is ridiculous. It's ridiculous. And that's why the success rate is high. So why have I brought all this up? I'm going to talk about one other thing about indicators in a minute. But the reason I brought this up is we're at the 1st of June. We've had the whole of May now trading. If your win rate isn't there and you're not growing your demo, then there is a training need. There must be something in what you're doing, because the strategy works. Okay, the strategy works. So if you do want to get to the bottom of it and you really want to get funded, you need to reach out to me, book a one-to-one. I want to go through your journal. Yeah, if you can send it to me a few days before so I can have a good look through it and look at the charts you were looking at the time. But I'm prepared to put that work in, all right, because it works. It works. It really, really works. All right. So again, if you want some more support and you want to get funded, please reach out to me. Please reach out to me. My journal is what turned me from being 40% accurate to you know, when I'm good, like 70, 80, 90%, the 2 weeks run up to the withdrawal, I think I lost 3 trades, something like that, 3 or 4 trades, but we're entering them 3 times. So the ones that won were just like, which is unreal. So remember, when we combine risk reward, our strategy, and our psychology of trading, it's really hard to lose. It's really hard to lose. So if you are losing, there is something that we need to fix, and I want to help you. Right, so make sure you use me. Reach out. Right, very, very quickly before I get all preachy. I don't like getting, but I just want you guys to win. Honestly, I want you to win. Right, I want to talk to you about the AO quickly. So this won't take long, but usually on the second entry, first entry, we know it's early. Yeah, we know we're in, like, right at the start. The second entry is when the 20 has been crossed, which means, you know, it normally will retest to the 20, but it's broken it. Usually when it breaks on the second entry, the AO flips to the other side. So when anything is above the baseline, which is this blue line, which is the middle line, it's in an uptrend. Yeah, if the uptrend is, if the bars are getting smaller, that's a pullback. When it flips over, that's when it's in a downtrend. You see there, bang, the 4 and 20 cross as the AO flips over. Happens all the time. 4 and 20 cross, bang, the AO flips over. Yeah, to the uptrend. This happens all the time. 4 and 20 cross, flips over. 4 and 20 cross, flips over. Right, what that means is when we're selling from here, for example, we've got in the trade, and then we see the flip of the AO on the downside, we're great. We're then just, the move just getting started, and we're in twice. We're in twice. Okay, so I just wanted to, I don't know how many of you know that, but that's what I look out for. On the hour, obviously I watch the trade on the hour, so I'm waiting for it to trigger, and then like this on ACAD, you know, the 4 and 20 crossing on the hour, you then get the flip of the AO above the baseline. But this bullish move's just beginning. Just beginning. Right? So that's just another little sneaky peek. Obviously, AO we use for divergence, which is one of the main things, and obviously the color of the bar gives the indication of volume, so bullish or bearish volume. Okay. Right. So right. Any questions before I'm gonna wrap it up now? All right. Next week, please feel free to join in next week if you want to. We're going to go back through. I'm going to be going through the basics with the newer students. So feel free to jump on that. We'll be talking about support, resistance, whatever you want, whatever they want, really. But I'll be following the trading plan. But honestly, if you want to master this strategy and be an independent, you know, time freedom trader, you need to master the following. One, you have to know what markets. Right, you have to be so good at market structure that you can tell if it's a pullback or an uptrend or a downtrend or what Elliott waves are. You know, all that's built into the scanner. You need to know it. You need to know what you're looking at. So you've got to master market structure. You have to know the Heikin Ashi candles inside out. You have to be spotting them before you trade. Yeah. You need to be good at divergence. When divergence is present, the market will reverse. Simple as that. You need to know all the different divergence how they work. You need to master the entry. Yeah, whether that's pro entry or scanner sort, they are the same. One is used with the scanner, and one is used with his new scanner. They're the same. It's the same technique. Then the McGinleys. There was the last one. What was the last one? Oh, there's a bonus. So 4x patterns. So do you know you get the flag, you get the ascending triangle, the rising wedge, the falling wedge, all those sorts of things. They're like corrections, market corrections, kind of market structure. All of those things will put you in a very good position when the scanner goes, book, sell this. You go, right, what's the market structure? Right, am I in a downtrend, or selling? Am I in a downtrend? Yep. The first hit, second hit, third hit, sweet. What are my candles telling me? Is it lost momentum? Is there a doji followed by a break of the low? Yeah, sweet. We've got the confirmation candle. Wicked. There's divergence. Yes. But all these things are just going to mean that, if divergence isn't there, I still sometimes take it because I've got enough confirmations, but I prefer to have divergence there. So if I've got a trade and I'm like, I just want this to run and not have to worry about it, then I'm spotting divergence on that trade before I take it. If it's not there, I don't take it. Obviously, you have to know your entry. The biggest thing for me is that you've got to aim for TP3. Have to. Like the amount of trades that are actually available to us that meet all of the criteria, as you know, sometimes you can go 3 days without seeing it. All right. So when you find it, you have to get the most out of that trade by aiming for TP3. Really aiming for the 127 extension, because it should go and take out the low. It shouldn't equal it. It should go and take out the low. If we're in the second or third hit, it should be going to make a new low. Yeah. So if you're aiming for TP1, TP2, happy with TP2, then you are strangling yourself because your risk reward will not be good enough. All right. It won't be good enough for the times where the market does what it wants and doesn't respect our strategy. All right. All of this has come from months of pain. Months of pain. And I want you all to succeed. I want you all to win. So got to master all those things. You've got to master our strategy, and you've got to be journaling like every single trade, your thoughts, everything. I want to see if you want me to really help you, I need to see your journal. All right. And I'm not going to be judgy. All right. I'm just going to help. All I want to do is help. So get in touch if you want to do that. I feel like I've been a bit ranty. I don't mean to be. I'm just very passionate about this opportunity. It's literally changed my life. Like, this is all I do now. And to help any of you do the same would just mean a lot to me. And to know that I can help some of you I've known for years that are like really good friends of mine. That's why I do it. I get nothing out of it. I've got a team, it's like 100 quid a week. Like, I just honestly want you to win, but you've got to go the extra mile. You've got to really invest in the education, because the education is ridiculous. So good. So good. So yeah, I have been ranty. I apologize. I want you all to win. I want you all to be millionaires. I want everyone in this call and everyone in the group to succeed. If you've got any questions, what to watch, when to watch, there's obviously the new market geometry masterclass. I did the intro today. Unreal. I would start with the indicators and then get onto the market geometry, but you could literally watch those videos on a loop and you'll be fine for a year or so. All right, so never stop learning. I'm ranting again. I'm sorry. Right, I'm going to play us out with some tunes. Before I find a song, if anyone would like to come off mute, ask me questions, please do. No?